All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Friday's edition of PremarketInfo.com, where we help you prepare for the market open and come up with tactics to combat high-frequency traders.
Yeah, Joel, Sal Arnick and Joe Saluzzi were on CNBC this morning. If you didn't get a chance to see it, go to the CNBC site. They were on at 7:30. They were battling Manoj Narang from TradeWorks. It was must-see TV there. We'll try to highlight a few things they were talking about. Something that I've talked about for quite some time, too, is this whole high-frequency trading internalization. Now, this is complicated stuff. I'll try to just simplify it. We'll maybe do a video in a week or two to really get into the details and nuts and bolts of it, but obviously just on our pre-market show, we only got a couple minutes here. So just to highlight, basically with high-frequency internalization, these firms, Joel, they actually get a sneak peek at incoming retail orders, and they will trade against basically the more uninformed orders. So just for instance, I'm looking at a tape here of Bank America. Now ignore the bid ask, this is today's bid ask, but this is from yesterday's tape. So these are just the trades scrolling by of all the trades going on in Bank America. What we can see here is that's 1251.18, 4,400 shares trade at 755.01. You and me cannot trade orders in sub-pennies there, Joel. We can't place sub-penny orders. It violates SEC Rule 612. But high-frequency trading firms and broker-dealers are allowed to provide price improvement. These guys are called internalizers, and they're allowed to provide price improvement to orders. And basically, when somebody goes in to sell at 755, they can step ahead of the current quote and buy that from them, that 0.01 in front of that 755 bid.
So if I'm an investor, okay,
Yep.
a regular investor, and I want to buy 1,500 shares at 755, and I put my order in,
Yeah.
okay, and someone comes in, and I'm first in line in whatever exchange, in New York Book, and someone comes in to sell 1,500 shares, okay, and I want to cover my position, I'm not going to get executed?
You're not going to get you got it exactly right, Joel. That's the whole problem with the structure. You are first in line. You should be getting executed when somebody comes in to sell, but these high-frequency internalizers step in front of your order. They jump the queue. They jump the order queue, and they're stepping in front of the order, and that's what they did right here, and they do this all day long to the tune of 20% of the daily volume is internalized. One in every 5 orders never ever sees the exchange and never gets a chance to interact with the exchange. So they trade against all the dumb money. The market orders that are coming in, they take the opposite side of virtually it's almost 100% of every retail market order that comes into the market is executed by an internalizer. They take the other side of all the dumb money. So your order sits there unexecuted, and they'll keep stepping in front of your order all day long, and they scalp, and that's what they're doing. They're scalping the spread.
And they're only risking what, 1/100th of a cent,
or nothing. They don't even have to provide price improvement. They can just match or beat. So in a lot of cases, they just match your order. They don't. They do the sub-penny price improvement just to justify it. So they're basically saying, "Oh, we're giving price improvement to the other side." That 1/100th of a cent adds up to 1 penny on your 100 share order. 1 physical cent. We're not talking about, it adds up to if you're trading 100 shares, instead of paying $755, you get $755.01. That is nothing more. Those pennies do not add up and do not justify. And what it does is it puts some retail trader who is bidding at 755, they don't get executed.
What did they do this in all stocks
all
the
stocks,
time?
All stocks. This is happening all the time. Really bad in the small and mid caps, and this is why you have no liquidity in the small and mid caps. Bank America now has lots of liquidity. There's lots of rebate, lots of other things going on. But you get into smaller stocks, Joel. There's 55-60% of the volume is internalized, and you have no markets. People don't want to make markets because if they bid it, they don't get the fill anyways. So just I want to show you on the tape, 755.01. So this guy buys 4,400 here, and you can see here, literally, a couple seconds later, he's selling at 755.9, the same 4,500 shares. So he just basically scalped, $45 from that spread right there, sitting there jumping ahead of your order, your retail order.
Well, even if we were allowed, the public was able to trade in pennies, it wouldn't be cost effective because we don't have the same transaction costs as these high frequency
Yeah,
traders
they're
do.
basically paying nothing. They're paying, no commissions, so there's really no real expenses with them, Joel. So exactly. So and they're all co-located. You can't compete with these guys. But the thing is, it's
Co-located, Dennis. Just explain that a little bit.
their servers are at the exchange, but this internalization is something totally separate from co-location because these orders are never even getting to the exchange. The retail order that is coming to execute against this 755, it's intercepted before it even gets to the exchange. So these orders are just done off exchange. So it's not even anything to do with the exchange. It's done off exchange. And they step in front of your orders all day long, and people don't even know it. 99.9% of the people in the market that trade the markets regularly don't realize this crap is going on. And that's the overall problem, and that's the gripe here, Joel, is that when these high frequency internalizers can step to the front of the line, that puts the retail trader at the back of the line. Uh,
And the retail investor.
and the retail investor. We'll do a we'll do a whole presentation on this maybe in a couple of days or a week or two. We'll try to outline the nuts and bolts of it a little bit better for you, but that's just a little synopsis. Obviously, we have to talk about the market today. Just want to give props out again to Joe Saluzzi and Sal Arnick. They have a new book, Broken Markets. They did a great job on CNBC today. Those guys are advocates for a fair market structure, and they're doing a great job. So thanks, Joe. Thanks, Sal. But we better talk about these markets here, Joel, or our traders are going to be like, well, we want to know what's happening with the markets.
Well, yeah, we'll talk about that. I think we're going to have a quiet day. I think a lot of people are sitting on pins and needles, waiting to see if I'll have another is going to win the Belmont. But we'll touch on that briefly at the end of the show. Had a rollover in the S&Ps yesterday. Dennis went from the June to the Sep contract. A lot of times there's position squaring, spreads, rolling the futures contracts. Sometimes you get some muted activity. But yesterday we closed at 1310. Couldn't clear that level in the pre-market. Only got to 1311 and a quarter. Dipped under 1300. Let's keep a real close eye on the close 1310, which coincided with Wednesday's low and close also. Our next resistance point is 1414. Coming back on the downside, Dennis, I don't see a lot of real good support in this market. So under 1290, but I just don't think we're going to get there today.
Yeah, Joel. I'm just trying to actually. My computer froze here, so your charts aren't up there right now. I'm going to bring them up for you here
You're
right
fired.
now.
You're
I'm
fired.
fired here, Joel. I'm trying to bring up the charts here. My computer didn't like all those quotes from Bank of America, so we got some charts up here for you now. Going into the stocks here, Joel. Let's talk about some of these moves yesterday.
Probably too many beers of that Tigers.
Yeah, I think. Well, I can't blame computer. My computers aren't nearly as good as the high frequency trading computers, obviously, because my computer froze up here from just all those quotes from Bank of America. I couldn't even load it up, but I have it back up here for you now, Joel. So you guys got a visual here again.
Okay, just going to some of the Big Ten. Apple Computer sitting on some pretty good support here at 570. If in fact we can't hold that 570, Dennis, I don't see much support until 565.50, which was Wednesday's low. Still, Apple's just kind of been trading in a tight range, Dennis. No real direction.
Yeah, it really has here, Joel. And that 570, I like that number that you're highlighting there. If we do take that out, obviously we've had a pretty good run from 565 to 570. Whenever something goes up that quickly, it can go down that quickly. So between 570 and 565, I don't think I see a heck of a lot there. So, but you never get down that 5. So yeah, basically when we highlight that, we're saying, if it gets to that 570, maybe you could try a short there. Obviously, always have a stop, and it might fill that gap there pretty quickly, or that run up that it had there in yesterday morning, or 2 days ago actually.
Okay, ExxonMobil gained some ground back. Was kind of looking at that 81.38 level, the May 30th high. Didn't quite get there. Peeling back, Dennis, you've had the 3-day rally. You think it's time to back in and fill a little bit in this ExxonMobil?
Maybe, Joel. I mean, we've had a heck of a run here. We talked about this level up here. If it got to this 82 area, big resistance up there. It didn't quite get that high there, Joel, 81.23. But it is peeling back a little bit here today. Wonder if 80 could give a little bit of psychological support. We're trading right there right now at 80.19 is the last. The spread's obviously 79.91 to 80.14. It's pretty narrow here in the pre-market, but $80 might give you a little bit of initial support. But you start getting under that 80, you had such a run up, I'd be scared.
Okay, IBM's just kind of walked its way back up to the mid 190s, sitting 50 cents above yesterday's low, which was 193.94. That will be support, Dennis, but under that, I don't think I want to be long IBM.
No, Joel. That's a level to keep an eye on too. But if it did go into rally mode here, you gotta look. We're kind of starting to run into those old highs from about 2 weeks ago. There, Joel. Do you see those highs I'm talking about? 196.49,
Yep.
196.28. Yesterday we got up to 195.82. We didn't quite get that high, but there is two or three highs. Then if you get above there, then there was a blowout high at not 198.08. It's hard to say really where we're going here. Like we're peeling back in the market a little bit here this morning. Obviously, yesterday afternoon we peeled back a little bit as well when I was at the Tiger game. I think you get down to that 1300 area. I think you're going to find some buyers. We're still 10 points or a few points away. Actually, we've rolled. So here I'm quoting the wrong contract. Give me a heck for that. We're at 1303 on the new September. We should tell our traders that we did roll on the S&P futures contract too.
Okay, CVX, similar to the IBM, kind of pulling back here. Spent a little time over 100, Dennis. Got up to 102 yesterday. Nice round number. Now we're peeling back, trading below yesterday's low. Keep an eye on the low and the close. It's always good when the numbers are right by each other, 118 to 100.39. Below 99.80 to fill that little gap there. This same thing is the IBM and the Exxon. I just don't want to be long below these 2 day lows.
Yeah, well, they've just had such it's air. If they start cutting below these lows here, you have a lot of air because we had such a run up, Joel. So you've got to be really careful when stocks run up like that. There's a lot of air. There's not a lot of reference points in here right now because you've just taken out all these buyers and sellers at these levels here. So it starts to peel back and can go through these areas very, very quickly. Now you start to get towards yesterday's highs or yesterday's lows. That's when you start to find different reference points. But there just ain't a lot of reference points in here because we've had such a run.
Okay, T. I don't know if you caught it on fair value yesterday. It had a nice gap up open, made a new 52-week high at 34.74, but then kind of came undone, Dennis.
Wow, it did, eh, Joel? I didn't even realize that opened. Did that open up there, Joel? 34.72?
That was the high. I think it was a 56, and my trade station picks up stray quotes. I'm not exactly sure where it opened in New York.
Yeah, well, it's showing that it opened right up there, though, and kind of peeled straight back down. Let's take a look at the yesterday's chart there. Yeah, Joel, we did. It looks like we opened up there. Maybe, it's a little ECN stuff right at 830.00. That might have had some prints going off there, too. But, yeah, it's showing 34.72, and we did peel straight off there. So, I don't know. You think AT&T's topping out here?
$34 is good support. Look for a little bounce there. This thing's had a heck of a run. One of the few stocks in the Big Ten still hanging out near the 52-week highs. Longer term traders, I keep an eye on that 34 level. If it doesn't hold, perhaps time to exit. I just wanted to highlight a few of the defensive stocks. Procter Gamble sneaked its way up all the way from $61 back up to 63.
Wow.
Dennis.
Wow. That had a great move there, Joel. Some of the defensive starting to come back up. Well, we talked about that 61 area and bounced off that, and it's coming. But I'm looking at these highs there. There's two or three or four highs there right around $63, Joel.
Yeah.
Maybe if it gets to there, maybe that puts a lid on it.
Okay, similarly, J&J's had a little run up, also got back over 63 after trading under 62. No real great numbers to highlight here. The 63.20 was yesterday's high. Doesn't look like we're going to get a shot at that, so keep an eye on the close. And finally, the Big Ten, you got Wells Fargo, the old low and the close right next to each other, 31.14 to 18. Now even trading lower in the pre-market, so use that level as resistance. I don't see major support in this down to Wednesday's low at 30.37.
Yeah, had a wild ride. Maybe you could say 31 just from a whole number perspective. Might give you a little stopping point here. It's what's holding it up seems to be in the pre-market. Getting bid there at 31's had a couple trades right in that area, but that's minor support. So if it starts to get below there, it could move down to those levels that you're talking about there, Joel.
Any market movers, Dennis?
We got a few. Here's an interesting one for you. MOH. We were highlighting it just yesterday's show that it was getting killed when they had that uncertainty in Texas. Well, today they're getting good news, believe it or not. I'm just going to bring up the couple days chart there, show you the big gap down day yesterday. Well, believe it or not, they've had some ruling there where they've prevailed in Ohio, and they're going to be able to offer Medicaid in Ohio. So this couldn't come at a better time for Molina Healthcare. Stock is trading at 21, getting over half of the gains back or losses back that it lost yesterday. So this thing's been a roller coaster ride for shareholders.
Yeah, the only thing I could give is pre-market activity, Dennis. When the news came out immediately, you got a gap up to 23.07. Since then, the euphoria has kind of wore off. It's traded down to 21. So I would look for some consolidation here between 21 and 23. But boy, that's a pretty ugly looking chart, Dennis.
Isn't it though, Joel? It's not pretty at all here. So you're getting some type of a nice bounce off news here, but man, I don't think I'd be a buyer up here on this one. CNC, same type of deal here. They're getting good news as well, being able to offer Medicaid in Ohio. So it was down in sympathy with MOH yesterday. It is bouncing solidly here this morning, Joel. Actually, believe it or not, 36.73. Where this thing gapped down from that whole area, so it's pretty much getting back all of its losses from yesterday, Joel. CNC.
37 is what it hit in the pre-market, Dennis. Do see major resistance coming up. We traded close to $38, 37.74. That would be the major resistance if it gets there. Dennis, I mean, just going back to the HFT stuff, do you when stocks like this, when there's kind of news like that, do they provide liquidity also?
No, Joel. These guys, and maybe some of your more aggressive, like different types of high frequency traders, might trade these markets a little bit, and they could, press into the momentum. But they more take liquidity in these situations where they'll hit out the bids. So instead of sitting there, and sub-pennying your order, turn around, they'll hit your bid if it's, sitting out there and it's out till lunch. That's the whole gripe, is that these guys actually become liquidity takers when the market starts to fall apart. So that's the overall problem, is that these guys are willing to provide as much liquidity when the market's not going nowhere and they don't have any risk. But as soon as risk comes in, like when the flash crash happens, these guys all of a sudden start hitting out bids, and you're left with no liquidity at all, because they're not only being the provider, they're all of a sudden turning around and hitting the bids. So they're actually being a liquidity taker. It's kind of a double problem.
Yeah. Okay.
One more market mover, Joel, though. McDonald's here. Just want to say, Mickey D, same story. Or May's sales came out. They are not good at all. McDonald's has just had a rough couple of months here, moving down again. 86.05, Joel. McDonald's. Look at these two lows here. 86.01, 86.01 from 4 days ago. Where are we trading in the pre-market right now? $86. So.
Oh man.
That's a nice setup right there. Starts to take that level out. Starts trading 85.5. I'd be real nervous to be long, but would you pick a bottom on this one?
You know what happens to people that pick bottoms?
Ooh, what happens, Joel?
They get sticky fingers.
85.95. It's actually trading through there a little bit right now.
Yes, keep an eye on that. This stock has had a heck of a run. Everybody loved it at 100. I'll wait till everybody starts hating on it at $80, because that sure looks where it's going to. Maybe not today. After this 86 level, going to the monthlies, Dennis, 83.74 was the low we had back in October. But just if my memory serves correctly, a lot of times when Mickey D's has these moves, it is 300,000 shares, but it's such a heavily traded stock. It's really not a large percentage of the volume, and a lot of times you get the contrarian move off the open. So keep an eye on that 86 level. Don't let it get too far against you. Better play may be if it opens at 86, dips below 86, and then comes back up through the open. It might be a good play.
What about this Belmont this weekend, Joel? I know you're excited. You're going to write a blog here for our listeners this weekend, just before, to try to give them some. What's your take here, though? Al have another? He going to have another victory?
Well, from a betting perspective, it's not a great race. I even might have a hard time making it down to the track to make my wager, because he's going to go off at such low odds. But Dennis, and I highlighted this in the blog, that horse made a move at the end of the Preakness, Dennis, where he came around the third turn, and he was ready just to mow down the field and win by 5 lengths. And I don't know what happened, but that horse lurched out. And miraculously, the jockey, Mario Gutierrez, who I think is going to be the next great jockey, somehow picked up that horse, straightened him out, and got him going again. I mean, he almost dead stopped in his tracks. And I'm not predicting another Secretariat-like victory here, but you could have the next super horse on the horizon.
Wow, yeah. Well, you were all over it the last couple of horse races, Joel. I'll give you props. You might know your horses better than your stocks, because you were the one that told me when he won back even before that. The last 2 races you've had, I'll have another. Are you going to put your money on I'll have another, or the odds just going to be too low?
Yeah, I mean, I'll put a little bit of a token bet there and maybe try and hit some perfectas or trifectas. But I'm just focused on I'll have another, and I'd love to see a Triple Crown winner. Folks, that's our show for the day. We covered everything from high-frequency trading to the Belmont. Where else can you get better coverage of everything? Premarketinfo.com. We'll be back with you on Monday.